Good morning and welcome to Real Estate Economics webinar series. Real Estate Economics is a leading provider of residential market consulting information and online research tools serving the residential construction industry and home builders across the nation. Every week we present a webinar covering a different topic. We cover the nation, many states on a whole state basis, a particular MSA, certain counties, or an individual large county in some cases. Today we'll be covering the state of Texas for May 2010. I'm John Mulville. At any time you can see our webinar schedule. These are posted to YouTube for your viewing every Wednesday at 9 a.m. Today, obviously, is the state of Texas. 1 week from today at 9 a.m. will be the Inland Empire area of Southern California. That's Riverside County and San Bernardino County, typically one of our most popular series. The following week, we haven't announced the topic yet. We may have a special topic or area. Keep track of our website and you'll be able to tell. And on June 16th, we'll cover the East Bay of California. To view these, go to youtube.com and enter Real Estate Economics. The webinars are typically broken into several pieces, so make sure you see all the pieces that you're interested in. You can view these, stop and start at your own convenience, all in high-def streaming, and you can download that and take it with you so you're not locked into our 9 a.m. schedule. Those are posted to YouTube for your convenience so that you can take them, listen, re-listen, or skip parts that don't interest you. As I mentioned, today we'll be covering the state of Texas, presented first, part 1 of 4, income and economic factors. This is civilian employment, non-farm employment for the state of Texas going back to 1990. As you can see, in 1990 we had about 8.3 million jobs in the state of Texas, with an all-time peak of about 12,470,000 in 2008. Periods of strong growth here, you can see, were observed in 1997, 98, and 99. A little bit of a flat spot in 2001, 2002, and 2003, which we associate with the dot-com phenomenon. Then we have another ramp-up in 2006, 7, and 8, attributable in part to robust housing market, but not entirely. This state is much less reliant on housing as a driver of those big numbers in 2006, 7, and 8, and consequently has lost jobs due to the recession and has lost construction jobs, frankly, but not nearly to the magnitude that we've observed in, say, Las Vegas or Phoenix. Our 2010 full-year estimate for employment is about 11,971,000. That puts us back at somewhere between 2006 and 2007. Again, much better than many Western markets where we're back to 2002 or 2003 in terms of total employment. Over the forecast period, we'll go out to about 12,690,000 jobs as of 2014. Here's the trends. Again, as we observed in the previous slide, the peak years of growth here were late in the last decade when we created as many as almost 900,000 jobs in 1997 and 1998. Drop off in 2001, 2002, and 2003. Again, a lot of those tech-related and going with the dot-com bubble. Then another strong 5-year period of growth from 2004 to 2008, peaking with about 400,000 jobs in 2006. As I mentioned, there's of course a construction element there, but it's not construction dependent as we saw in many areas. 2009 was obviously a tough year, and between 2009 and 2010 we're losing about 500,000 jobs between those 2 years. That is almost 4% of the total employment base, so it's severe, but frankly not quite as severe as many Western markets and some of the hard-hit states of the East. If you look out during the forecast period, by 2011, during the course of 2011, we expect to add about 70,000 jobs, really picking up steam in the out years with 250,000 or more in 2013 and 2014. This particular graph shows median household incomes for the state. Texas tends to rank about the middle of the 50 states, with a number that's slightly below the national average by about $1,200, but generally very close to the overall U.S. average. That makes it possible for people from many parts of the country to move to Texas, where the job climate is frankly more friendly than it is in many areas. As you can see, there's periods of relatively large growth syncing up with the economic cycles in the late 90s and 2006, 7, and 8 time period. We've got a little bit of flat spot in here in 2009 and 2010 before income growth resumes through the forecast period going out to 2014. This shows it a little more clearly. A good year of job growth, or income growth, I should say, is about 2.5% to 3.5%. We observed that in 2006 and 2007, dropping all the way down to 0.6% in 2009 and 0.7% in 2010. Over time, we're going to pick back up towards the long-term averages. We're a little concerned here about the median income compared to disposable income. We're going to get a sizable tax increase, federal tax increase at the end of 2010, so the disposable may not be as great as it's once been. That's the end of part 1. Please join us for part 2.